Hi, and welcome to Tradescores Weekly for November 11th, 2019. The aim for this product is a do-it-all-for-you service that looks for those longer-term trading opportunities, the things that you can build a portfolio around using the Stockscores approach. Rather than you do the work, I will do the work and highlight the stocks that I think have good potential, but also teach you a little bit about how I analyze stocks each week. And so this is a new product, it's evolving. There's gonna be lots of changes that come in the weeks ahead as I define how it's gonna look. And so don't take what happens this week as being the way it will always be. But this week, what I am going to do is take a look at the market analysis, just a very quick, longer term view of the market. We'll do a market scan. We'll look at some trading opportunities, some trade scores, and we'll review the past trades. And then I'm gonna do a deep dive where I look at an individual chart just to try to teach you how I analyze charts when I do analyze them. So let's take a look at that now. So starting us off with the market analysis, and this is similar to what I do in the market minutes video, but a little bit more of a long-term view. And I just want to highlight that the market has broken out to new highs. It did so from volatility. And typically what happens when you have that little trough there before a breakout is you often fill that trough. You can see that happen back here with this that ultimately filled in this trough. And so we'll see if we get a little bit of a pullback. That would be healthy within the context of that longer term trend. Market looks good right now. No reason to not be bullish, but a little overextended perhaps, and some profit taking may be coming soon. This is the Russell 2000 3-year weekly chart. It is underperforming the overall large cap market like the S&P 500, but it's starting to look better. It's at the top of the range of the last year. If we can break out through this, that'd be great, and we'll probably head back up to the highs. This is, to me, a good retail proxy. That is, it represents what retail investors are doing. And when the market is really doing well and easy and fun to trade, you need that retail investor. To be honest, they're more emotional and they send stocks up quicker. And so I'm hopeful that we'll get a breakout through that 160 level and head up back toward that 173. T.XIU is the Canadian index, also breaking to new highs, but also breaking from some volatility. So market looks great, but don't be surprised if we get a little pullback in the short term. And then the market I think you want to avoid in general, although certain stocks may do well, but in general, the TSX Venture, those micro-cap Canadian stocks really don't look all that great. Until we can start to build some optimism here, I would be pretty cautious with those really cheap stocks on the Canadian market. All right, so let's now do a market scan together. We're going to jump over to the Stockscores website, and I'm going to run a scan, which I do every day. This is called the abnormal break scan. I do this on the US and Canadian market during the week. At the end of the week, I don't do this one so much. I do more of the Stockscores simple weekly scans. But I just want to take you through and show you some things that I like and what I like about them, and also some things that I don't like and why I don't like them. So JCPenney is our first chart here, and I actually think that this is not too bad. It is breaking its downward trend line fairly recently. It's building a rising bottom. Obviously been a stock that's decimated, but we've seen some life in these retail stocks. We had Kroger, KR in the last 2 weeks start to show some strength, and Macy's starting to show some strength. So because interest rates are low, I think maybe the American consumer a bit better off. We're going into Christmas. I wouldn't do anything on JCPenney until we can get a break through this resistance level right there, but a stock to keep an eye on. And we'll obviously be keeping an eye on here because I'm going to do the market scans every week. So here's a stock that I would not consider, and I'll show you why. This thing started its upward move back here. That was the time to take it when it made that abnormal break with abnormal volume through the downward trend line. Well, now it's come up to the resistance at those all-time highs, or maybe not all-time, but the 3-year highs, and it just has limited upside. It's going to bump up against this for some time, probably go sideways, could even reverse and go lower. Not something that I'd want to take here. If I owned it, I would still hold it, but I would be dancing close to the exit door. So that's the kind of thinking that I have when I look at these charts. A lot of these patterns just aren't what I want to see. For example, this one, yes, it showed some decent life today, but notice that it closed off of its highs and we're still below the downward trend line. We broke that one and perhaps we'll make a little run, but even then we've got this lengthy sideways trading range where for 3 months it traded sideways. That means a lot of volume passed at that price range. And what happens is people that have been losing money on a stock, when it gets back to what they paid for it, in this case somewhere between $12 and $14, there is typically some selling pressure there, as people just want to get out at break even. And that's the challenge for stocks that have lengthy sideways trading ranges at higher prices. This AAOI is interesting. It's been going sideways for some time. It's starting to show a bit of life, a little bit of volume coming in. I think it needs some work. I would like to see a real obvious breakout of that trading range, but I think it has some potential. All right, so that's the kind of thinking I go through as I look at these charts. And again, on a weekly basis, I'll try to teach you a little bit about how to read charts and what to look for, and hopefully we'll find some as well. But realize that when I pick stocks, I do a lot more market scans and work than what I show you here. If I showed you what I do, this video would be a couple hours long, and that would be pretty boring. So I'm going to try to give you the Coles notes and just get you right into the picks. All right. So let's do that now. Jump over to what I call my trade scores, my trades that I think are worth considering. And here is my first one, REI. Nice little break of this downward trend line from a rising bottom. A little bit of volume coming in. Not great volume, but still on a weekly time frame, that's not too bad. I'd give that a 7 out of 10. All right, next up is Baidu, which we have some nice abnormal action last week, some really strong volume. I'm a little concerned that we haven't quite broken the downward trend line. Depends on how you draw it. If I cut across the bodies, we're good. If I cut across the tails, we're not so good, but it's very close. I can't argue with the really strong volume, the really strong buying interest. I think that's a good sign that we are bottoming. Might take a little bit of time to get moving. Probably when it gets up into here, we're going to find some resistance because it traded sideways for some time there. But I think this is pretty good. I'll give that a 7 out of 10. Next up is US Steel, letter X, and again, kind of a common theme with a lot of these charts this week, where we are breaking a downward trend line a few weeks ago. Volume not really strong yet, so it's a little bit of a concern. Fair bit of resistance here. I would give this a 6.5. It's good, but not quite as good because we don't have the abnormal activity. MD, also breaking its downward trend line, building some rising bottoms. Price action not super abnormal, but volume shows that this stock is being accumulated, and pretty strong volume, and got lots of upside until we hit that level of resistance up here. So from a risk reward standpoint, it looks pretty good. I'm going to give this one a 7 as well. I think it's a little better than the last chart. T.AAV, we're starting to see a little bit of life in the energy stocks. Not a lot yet, but we're starting to see some, and I like the volume coming in. I like the price action breaking through that resistance. Perhaps we get stuck under this for a little while, but I think got some pretty good potential there. I give that a 7 out of 10. T.MAXR, also lengthy sideways trading range here, breaking out, volume increasing. So someone's found a reason to buy this stock, and it is likely to move higher in the months ahead. Give that a 7 out of 10. And finally, CNO, which is breaking this long-term downward trend line with really good price action, pretty strong volume. Stockscores getting back above 60 after being below for some time. I would give this a 7 out of 10 as well. All right, so now let's do the Tradescores review. So because this is a new service, we don't have a lot to review. I'm going to show you the screen that you will ultimately be able to look at. I'm using the infrastructure that I have at Tradescores.com, and we're going to probably make a little bit of change to it. It's something that I built a number of years ago, and I'm going to try to refresh a little bit in the months ahead. But for now, let's just jump over to the Tradescores website and take a look at how that looks. And so what I've done is I've entered in all of this week's picks into here using Friday's close. I know this video is coming out on Monday. Again, we're going to try to normalize everything. You got to be patient with me for the next few weeks. But this is basically the interface that you'll be able to see, where you can see the hold period, the entry price, the current risk reward, percentage change, and that sort of thing. The two picks that I made previously, and I've got a few more to add that are previous old ones that I have to add still, but that's what we're going to look at now. So we'll jump back to the website or to the presentation here. So here's NMRK, which made its entry signal when it broke that long-term downward trend line a couple of weeks ago and is moving up quite nicely so far. You can see that 2 weeks since then we've been moving up. Remains a good hold, no reason to exit. Next up is TTC, which broke out of this ascending triangle pattern with nice price action. Volume not awesome, but it's held up well since the breakout. And in fact, we're currently above the open for this week, and I think we could start to wind higher in the weeks ahead. So that looks pretty good as well. Remains a hold also. Support on this one down here just below 70. or just above $70 a share. And all of that will be tracked on Tradescores so that you can monitor that as well. All right, so now we're going to do something called Deep Dive. I just randomly pick a stock. This week I picked Suncor. I want to just walk you through what I like and what I don't like about a chart as more of an educational thing. So Suncor has built a pattern that is indicative of a stock trying to reverse a long-term downward trend. And you can see that the downward trend was broken 5 or 6 weeks ago, and it's starting to come alive again with a little bit of move up. You can see a little bit of volume coming in. So it looks pretty good. But now the bad news. So first of all, we've got some maybe 3 months of sideways trading here, which is going to limit upside. And if we also go back really far, you've got all of this stock that traded in that price range, and we're kind of going to have to chew through that. So in order for this to really do well, it's going to need some strong volume to get through that overhead resistance. And this is a chart where I'd give it a 6 out of 10, but to me it's not quite good enough to go in a portfolio because there's probably better things out there. And I think one of the key things we have to keep in mind is that we need to be selective, need to be fussy. There's opportunities coming all the time. With the tools that I have and with the process that I'm going to be doing each week, we'll find lots of stocks. And so let's be fussy. It's good, it's not great. And so that's a reason to pass without FOMO, without the fear of missing out. All right, so that has been this week's Tradescores Weekly. Please click on the like button if you thought it was good. Also, leave a comment, things that you like, things that you don't like, things that you'd like to see added, things that maybe waste of time. Just let me know. I'm going to be evolving the product over the weeks and months ahead. And so the more feedback I get from you, the better I can make it. Trade well.